Gone by. Profit too saw an uptick of about 1.5%. But let's put the focus on JSW Energy as well. A weak quarter for JSW Energy as provisions eat into profits. Revenue fell 4.5%. This as the company reported a loss of 480 crores. That's as opposed to a 24 crore profit that they saw year on year. Now, in the same quarter last year, the joint managing director and CEO of the company, Prashant Jain, spoke to BTVI, really gave us a fine print into the quarter gone by. Listen into what he had to say.
During the quarter, yes, we have made a provision of 815 crores, but let us look at the entire operating side. During the quarter, the net generation was up by 7%, and during the financial year, net generation was up by 1%. And we made a EBITDA of 3,228 crores during the financial year, which was down by 9% than the previous year. And but we have made a provision of 815 crores during the quarter, because of which there were the losses. And these provisions were on account of 584 crore for JPVL transaction and 100 crore for Toshiba investments and 141 crores for our South African mine.
So, talking about the JPVL loan, can you give us an insight into what is the status currently and what are the negotiations going on? What are the steps you're looking to take forward?
So, as a prudent financial policy, we have provided this loan in our books, but that does not mean that this money is not recoverable. We are deciding and we are evaluating at this point of time all legal recourses, because there is a hardship which JPVL is going through at this point of time. So we are in discussion with the company as well as the lender for recovery of this money, and we are also evaluating whether we should be taking JPVL to NCLT.
All right, so and what is the discussion on the JSPL side? If you could give us an update on that.
As regards to JSPL, recently we have received a request from them for the extension of SPA. The long stop date at this point of time is 30th June 2018. We are evaluating that particular request.
So could you give us an insight into what sort of debt reduction you have seen in the past year and where is the debt currently? Also, what sort of finance costs are you looking at this moment?
So during the year, we reduced our debt by 3,100 crore. Now our net debt is 11,280 crores at the end of the current last financial year. And we reduced our interest cost by 114 basis points during the year, and our weighted average finance cost is 9.03%. We ended year with 1:1 debt to equity.
So also talking about the power prices currently and also the demand in the sector, if you could take us through what we have seen in the past year, in this quarter especially, and going forward, what is your view on what sort of demand and prices will we be seeing?
So during the year, we had seen a very interesting trend, and the quarter-on-quarter demand continued to grow up in 5.1% in quarter one, quarter two it was 5.6%, 6.3% in quarter three, and 7.1% in quarter four. For the year as a whole, the total demand growth was 6.1%, and we believe that the demand is continued to grow. And as Government of India is also planning to connect all villages and rural India by providing access of power, that this demand is going to further grow up. And also the merchant prices were continuously growing up, and they moved up from 2 rupees 42 paisa in the last financial year to 3 rupees 19 paisa in FY18, and in calendar year till date the prices are 3 rupees 61 paisa. So we believe that the prices will continue to firm up because there is a less domestic coal availability at this point of time, and then PLFs are also ruling low, so prices may be firming up.
And you, sir, also talking about the international coal prices, what sort of a pressure are you seeing on the margins currently because of that? And going forward, how will you be looking to offset that? As you said, you'll be looking at increased domestic procurement. So if you could give us the details on that.
Yeah, so the last year that overall coal index was up by more than 14%, but dollar was not, rupee appreciated by 4%. So there was a net impact of close to 9.5% on the fuel price prices. But now going forward, we need to see how the index behaves. At this point of time, we are seeing the index will be moving in the same direction, so there may not be any specific increase in the fuel price for the FY19. But JSW Energy is looking for switching over to domestic coal. Recently, in the current financial year, we have secured some coal around 173,000 in recent coal auction for our Vijayanagar plant.
So, another important announcement from your side was the electric vehicle foray, and you have made further announcements. So, if you could take us through the announcements regarding entering the buses and the light duty truck segment, and also what sort of potential do you see, and by when can we see these products coming from JSW?
So we have now, in addition to passenger cars, we have decided that we will be making entry into electric buses as well as light duty trucks, and the total capital expenditure we are envisaging is 6,500 crore, which will be spent over 3 to 4 years time frame. Our planning is that we will roll out our buses within next 2 years time frame, and our car will be rolled out in 3 to 4 years time frame.
And in terms of, the return on the investment that you're putting in, as we discussed the entire scenario with players already being in that space and the competition being there, and as you said, electric trucks as well, do you think that by the time you release these products, there will be that sort of a response and that sort of a demand coming for your products as well?
Yeah, it's a new sector, and then there will be a slow progression. We don't think that people will be moving to electric vehicles immediately. So the sector is going to migrate very, very slowly, and we believe we are at the right time, and there will be a sufficient market. And as regards to returns, we are quite optimistic that there will be enough returns in the electric vehicle segment as they are in the conventional vehicle in time to come. Initially, there will be the hiccups because of the higher capital cost, but in time to come, there will be a very good business case for electric vehicles.
So can you give us an idea? You said 6,500 is a capex overall for the EV business, but for FY19, what sort of a capex you have set aside, and what will be the breakup of that, and how much of that will be going also in your renewable energy space?
So for electric vehicle, we are contemplating to spend 1,000 crore in FY19, and for our solar business, we are planning for 1,200 crores, of which will be for the two pieces. One is for 200 megawatt of the solar plant, and also 1,000 megawatt of the solar PV panel manufacturing facility, which we will be setting up at Vijayanagar.
So lastly, talking about all the companies that are likely to go to NCLT, some have been admitted. You have said that you will be willing to bid for almost all companies, but just specifically one company which got recently admitted, Monnet Power, will you be looking at that, considering Monnet Ispat is already in the fray for JSW? Will that be an obvious choice?
So I don't want to comment on individual asset, but generally, as I said, that we remain interested in most of the power assets, and we will be looking by case, and as and when any asset is admitted into NCLT, we will be evaluating.
All right, we'll be looking at all IVC cases on a case-to-case basis. That's Prashant Jain of JSW Energy, a weak quarter there from the company. But with that, it's a wrap on this edition of Trending Today. Thank you so much for watching.